Dev Agrawal. Now, from a market standpoint, one month ago, the election cycle was supposed to be a no event and a low volatile event. But suddenly, from backstage to center stage, in terms of occupying mind space, the importance of election cycle is making a comeback. 6 weeks ago, perhaps the word on D Street was that election cycle does not matter, but budget matters. But looking at the market volatility has been the importance of election cycle seems to be occupying, like I said, center stage and mind stage. So how should one adapt portfolios? Elections, well, they are important, but what is the importance of this election cycle in the overall scheme of things? Valuations versus FI, selling, domestic inflows versus earnings, all that and much more on this edition of Big Picture with Mr. Raamdeo Agrawal. Always a pleasure to have you, sir. Thank you for joining us.
Thank you. Bully.
What was supposed to be a no event, the election cycle, especially after the state assembly election verdict in December, is now occupying all the center stage. Is the nervousness largely coming because of the anxiousness, khuspus, curiosity ahead of the election cycle?
Yeah, it happens. A large country, diverse, north, east, south, west. I mean, people have different feelings everywhere, and politics is very complex. So, I mean, this had to happen in the sense that at some point of time, this is also flow up now. This 4-5% reduction in the voting pattern. Now people are trying to figure out whose 5% is lost. Is it BJP is lost, or is other sides lost? So that time only will tell when the boxes get opened on 4th of June. I mean, we're just watching it, and we'll have to take what comes. But whatever we see in terms of betting market or whatever opinion polls are coming, whatever grey point is coming, best is the betting market. They're still at 295, 300 for BJP alone. NDA, I don't know, it might be another 40, 50 seats higher. So the continuity of the current government and current policy doesn't seem to be still, I mean, the continuity looks to be an extremely high priority event, like 95, 97% types, or maybe even 99%. So yes, we'll have to pass through this next 3-4 weeks of turbulence, and we have more confidence than the foreigners. And that's where I think the real turbulence is coming. They are selling almost $1 billion every day because they don't want to take the event risk. So they are kind of a little jittery, and they have been, selling, and that changes the entire dialogue.
So from a market standpoint, what is important is to understand what markets are betting on and what is in the price. So if I say that markets right now are betting on continuity and more like a comeback of the current regime, I will be right.
Yeah, I mean, continuity is the main thing. Policies to continue, and the corporate earnings. See, for me, what matters is the corporate earnings. How good is the corporate earning, and the continuity of that, and the projected 15-20% growth next year, that comes through, and that is possible when the continuity of the current policies continue, and hence the current political setup should continue. So clearly, that's in sequence. And what we are seeing, we are right in the middle of earnings season. We must have seen yesterday's SBI's bumper result. So it's a mix of some good results, some not so good results. Particularly from the consumer side, I think we got a little weaker kind of set of numbers from HULs and things like that. But still, I think if you see the aggregate of the earnings of the total declared results are still 15-17% ahead of the last year's same time. That's good. I mean, and right now, like cement and some other sectors, they're suffering from the election phobia also, in the sense that the bosses are all on the field, ministers are all on the field, and the focus is the election rather than the managing the economy. So my sense is the project execution will get a leg up immediately after the election. So you will see the pickup in the earnings in the and then second is the monsoon. Last year has been a severely drought kind of situation. So that is the worst of that is now showing up in this summer and all. And once the monsoon starts in June, July, I think things will start looking up, and rural economy will pick up, hopefully, if 106% to normalcy comes. So good monsoon and good continuity of the political setup, and the capex boom continuing, tax collection being good, I think we are in good for, again, next 12 months, and after that we'll see.
But if I say that looking at the current leg of numbness in the market, what has happened in the last 2 or 3 weeks, there is, it's not an absolute drop, but there is numbness, there is FI selling, there is increase in volatility. If markets like the election verdict, then we could be in for a post-election sparkle and a post-election rally?
It should happen. I mean, in the sense that, see, also, Nikunj, what has happened is this: there was no correction in the market, and increasingly people are used to not liking any kind of a drop in the market, which is not the natural phenomenon of the market. Market must correct the poison or excessive valuation or whatever is the bad practices of the market. That must get cleaned up as market corrects. So, so what I used to call anlom vilom. You cannot have only anlom. You have to have anlom vilom. So that rhythm was lost of the market. So now we are seeing bit of vilom, I mean some kind of correction, which is, I would think it is very healthy. All the excessive valuation, some bad players have come, some excessive speculation is on. Everything gets, people should realize there is a risk in the market. There is a risk market. So that's what we are going through, and it has come in the form of maybe election uncertainties or FI selling. In whatever form it will come, but there is a risk, and that people must recognize. And last 3-4 days have made us realize, yes, markets can go down.
You've seen many election cycles, but there is a new generation which is called as the post-COVID generation, which has come to the market, which has not seen the election cycle at all. And you'll appreciate that there is a lot of curiosity ahead of the event. So what should a genuine long-haul investor who knows that, okay, if markets like the election verdict, everything is okay. If markets don't like the election verdict, it could be 10-15% downside. What should that class of first-time investor who was seeing this election cycle for the first time should do in their portfolio?
See, a good thing is that new class of investors have come through SIP route. So they must make sure that market should not shake their confidence. They must continue with the subscription of the SIP. Even if market goes down, whatever happens and market goes down for next 2-3 months, they must continue. Because that is very important in SIP, that you don't break the subscription in bad market. In good market, everybody puts it. But what is important is to do it in the bad market, so that you can buy a lot more for the same amount of money. So that is one thing. There is one very large portion is the SIP driven investors, so they don't have anything to worry whether the market is up or down. Up is also good for them, and down is also good for them. The direct investors who are coming direct stocks, I mean, they are the guys who are really adventurous, and the experience, not having experience of cycles is going to be detrimental, and they might become jittery, and they might become depressed, and at the bottom of the market they might throw. Market will try to shake them and pull their stocks from their portfolios. So I think that's where some kind of maturity will come, and that is the lesson they will get in this point of time. So they should have that, they should always think that there can be 10-15% correction at any point of time. Though they might have not seen that kind of correction in the recent past, but it is part and parcel of the market system.
DIs are buying, FIs are selling. Typically bubbles are made when there are no sellers and only buyers. So can I safely say, looking at the market technical setup, whether it is open interest or participation or the retail activity you have at your firm Motilal Oswal Securities, and looking at the construct of DI selling, the market is nowhere close to what could be called as overbought, extended. Markets are light. Can I say that?
I don't know the technical positions and all. I don't see what is the outstanding position and all, but for last 3-4 days, 5 days, FIs have been selling, markets are also going down, so clearly market may not be overbought. The corrections have taken place. So market should be in healthy condition, I would think. But how the foreigners will behave. Because see, I was there in US for Omaha Berkshire Hathaway meeting last fortnight. So there I met some 10-15 FIs who are investing in India. I mean, everybody except for 1 or 2 who are fully India dedicated fund managers, they are getting a lot of inquiries for India dedicated funds. It is early, but they are getting inquiries. What has happened is EM, that emerging market bucket, has not done well, and there you club China, Russia, Korea, Taiwan, all of them are put together, and somehow for last 10 years they have not done well. And the developed market, particularly America and all, they have done fabulously well. So there is no case for money to flow into emerging market bucket, and India is just part of emerging market. India alone has done very well, but it is clubbed in the emerging market basket. So I was talking to somebody, and they are saying that emerging market finally is looking very good, and it could move by 20-30% in next 1 year. That's the technical condition of the EM. And if that were to happen, then we have a very good chance that FIs may come back into India in next 1 year. And if that were to happen, I'm pretty sure the retail is going to keep buying. Maybe at $5 billion or $4 billion, but net they'll keep buying. So we have a plus and minus situation. Plus with the domestic and minus with the foreigners. If it were to become plus, I think we'll see a very vertical rally in the market. And that possibility is there for, and maybe not for entire 8, 9 months, 10 months, but 2, 3 months is also good enough to take the market to different levels. Then I think the third player is the supply side. Whenever this kind of demand is there, valuations are a little high, then the corporate paper supply is going to come. And you might be seeing that now IPO market window is open for last 8, 9 months continuously without any break.
Every week, 2 or 3 IPOs.
I think this year we're going to do about one IPO every 2 days. I think some 170, 180 IPO or follow-on offering is going to happen, which is the best thing to happen. I think this entire rally, the best thing is that now money is finally flowing into real economy. So second order effect of the rise in the market is going to happen now. And that is going to drive the corporate earnings. And once the earnings are driven, then valuations are justified. And hence, more money coming in. So I think the initial demand, retail revolution which is on, that has pushed up the prices. And that has led to supply from the FIs, and now supply is coming from the corporates also. Let's see how it plays out as we go forward. How robust is the earnings pickup as we go into the next 2-3 quarters.
There are a lot of themes in this market: PSUs, defense, railways. But one theme which you've really understood over the years is autos. And auto seems to be in a great patch now. Two-wheelers are doing well. I looked at Escort numbers, they are also looking well. Maruti is doing well, Tata Motors is doing well. Do you see this kind of a comeback which has happened in autos, especially in the discretionary end of the market, to last for next 2-3 years?
Yeah, so long as you have the rallies going on in the capital market, which is another source of what you call wealth creation for the people at large. So they are going to use their whatever market cap power or wealth they have created, financial wealth they have created in their portfolios for buying discretionary stuff, whether it is a high-end housing, high-end cars, high-end fashion, travel, all luxurious things. So that's where you see but now you see that is trickling down. Initially it started with the high-end autos, and now even two-wheeler, particularly in the month of April, you might see that two-wheeler has recovered big time. Hero MotoCorp, which is the rural what do you call product or mass product, that has done well. So we must not lose the sight of what two-wheeler does. If two-wheeler has sustained recovery, it means that I would think that as a proxy, the rural economy is now recovering. And with the help of better monsoon, we could have a fantastic time in 24-25.
So 3 to 5 years from now, which end of the market do you think could trade significantly higher from where it is? It could be earnings, it could be P, it could be flows, it could be pure value migration. But which end of the market do you think has potential to trade higher and significantly higher than where it is right now? 3 to 5, it could be 5 to 6.
I would think capital markets. All the participants of capital markets, they are asset light and growing. You see all the results which are coming. They are 100% up, 38%, 40%. I think CD, today also there are some results. So all of them are doing well because volumes are building up, there is an operating leverage and asset light nature of the market. So that's where I think we are going to see a lot of action. They are very conservative businesses, asset light businesses. And the shift from the fixed income to financial products is very, very visible. And we accrue about 17-18 lakh crores of fixed deposits in banks and only 4-5 lakh crores in the stock market, if at all that number is right. So this is too bad, rather, I would say too imbalanced. So my sense is incrementally, that 17-18 might not come down, they'll keep on growing at 8-10%. But the growth in the financial market numbers will be far higher, maybe 20%, 25%. And so 5 lakh crores will go to maybe 6.5, 7 lakh crores in next year. So we are going to see a lot more money coming to the financial market side, and that is going to give birth to larger AMCs. Because see, Nikunj, one of the things is that in last 25 years, total savings in the Indian economy was $10-12 trillion. But next 25 years is going to be $100 to $150 trillion. And it's going to hit us every day. It is hitting us every day. because 25 is going to happen day by day. So this is the journey of India accumulating almost, I would think by 10th or 12th year, it will be $5-6 trillion of savings per year. So I think these institutions cannot be replicated. So you are going to give birth to a Morgan Stanley, a Merrill Lynch, a big JP Morgan or big asset management company out of India with a serious scale. So I see that part to be very exciting.
So आप दलाल स्ट्रीट में हिंदी वर्ड बोलते हैं ना, जोरदार क्या होने वाला है इस सेक्टर के अंदर? That's the word which is जोरदार धमाल होने वाला है.
धमाल होने वाला है, धमाल होने वाला है.
तो इस पूरे सेक्टर में जोरदार धमाल होने वाला है. So I'm just to break it for our viewers. When you say financial markets, India is going to grow, savings will grow, equity penetration will grow. Equity penetration in comparison to the developed world is low in India. Mutual funds will grow, brokerage will grow, intermediaries will grow, wealth managers would grow, everything would grow. That's like one
big segment full.
But do you have the price comfort in some of the financial intermediaries, whether it is wealth management or even whether it is AMCs? Do you have the comfort of price?
See, you have to understand all of them individually, but nothing happens in a straight line. I'm talking about little, 5 years, 10-year view, that this is bound to happen. Maybe it may not happen for next 6 months. So the price which you think is a little higher may correct. That's fine. Because you cannot decide by what happens in next 3 or 4 months in particular. See, price is one thing and P&L is another thing. Yes. See, what is happening to the P&L and balance sheet, that you focus more than what is happening in stock price. Because stock price could be very sentimental, particularly in short run. Long run, it's all weighing machine. But in the short run, it's an opinion, it's a voting machine. So people might say that now markets are slowing down, volumes are falling off, investors are running away. So there could be a lot of panic. And hence this sector is susceptible to those kind of panics. So in the short run, yes, the stocks may fall, but that would be a great opportunity to buy into all of them. Because the trend is clearly set.
So last time I said I will sell 2 words और आपके चेहरे पे ऐसी आई थी, राम मंदिर और ज़ोमैटो थे, है ना? अब तीसरा वर्ड क्या होगा जिससे आप पे चेहरे पे ऐसी आएगी?
I don't know what you're saying. Yeah.
I would actually say your visit to Berkshire Hathaway.
Yeah, that was fantastic.
Buffett at 92 now.
Yes, 94.
94 now, yes, 94 now.
Yeah.
He still held on to a 4-hour AGM, 4-hour long AGM.
There was no difference in that. His energy level, his warmth, I think he enjoys seeing 30,000-40,000 people out there and clapping for him or Charlie. He was obviously missing Charlie, but it was tribute to Charlie. This particular AGM was tribute to Charlie. So they started with the movie. The movie was completely dedicated to Charlie. Then he spoke about him, his relationship with him, what he has written in his letter as a tribute, that Charlie was the architect and he was only a general contractor to execute what has what Berkshire has become today. So he in his mind, Charlie Munger is the guy who actually visualized what Berkshire would be. Like an architect, he visualizes how the building will look and he designs. But finally, a contractor comes and gives shape to that 3D structure. So he's the guy who gave the shape. He executed everything, but it was designed and thought through by Charlie. That was his...
Some people tell me that India ke Charlie and Warren to Raamdeo Motilal ji hai. Is it true? Partnership, the faith,
yeah, partnership could be even stronger, much stronger. It's an equal partnership. Charlie and Munger is like, he was 1.5-2% of the Berkshire Hathaway. This guy is like 40-50%. We are completely equal partner, day one partners.
So Charlie who has the vision? Who has the vision and who's the executor?
Obviously executor is Moti. Okay. Bulk of the execution does happen with the help of Moti. I can't do what he does, the pace at which he can move, the pace at which he can take decisions and all. But it's all together in the sense that we think through together, and we do share, some kind of ambitious targets and things like that. And then they go about whatever is our strength. Coming and spending time with you is my job, but taking all the...
So what happens at a Motilal Oswal AGM? I've never been. So आप दोनों बोलते हैं?
Come this time.
It would be an experience actually.
Yeah, it's not... See, this regulatory thing is, that then after that we host the shareholders meeting actually. Of the once the business is over, resolutions are passed. Then after that, I personally hold and talk to them because they are interested in some tips and guidance in the market and things like that. so that we over a cup of tea we do talk to.
तो आप बुलाएंगे तो हम आएंगे, आप आने बोल रहे हैं तो इस पर बुलाइए, पक्का आएंगे.
Yeah. So
There's one quote of yours which I, in a sense, have itched, somewhere in my mind. And this is a quote of one of your very, deep wealth creation study. To make money in the market, you need vision to see, courage to buy, and patience to hold. Vision is, in terms of, if I can break it for our viewers, where you can see. So, for example, financial services is where you can see. Then is courage, and then is patience. How would you connect courage and patience? You've already told us vision, why you should buy financial services. अब courage और अब उसकी बात करते हैं, patience की.
Yeah, so courage is something where when you understand something, you got to act. खाली देखे तो फायदा नहीं ना. You can keep talking about ये हो जाएगा, वो हो जाएगा, लेकिन आप कुछ करेंगे तो आपको फायदा क्या होगा? So you have to allocate. When you need to act means you have to allocate. You have to say, okay, here is my, out of 1 crore, 50 lakhs I am putting in this intermediary. So once you do that, and after that, maybe the moment you buy at 100, it might come down to 80 or 70. So, then you got to hold it for next 10 years, because nothing happens in a straight line. There is a, things have extended a little bit, and quite possible a quarter or two it might be slow. But it might just take off, because post-election is going to be a very interesting time. And if markets have corrected by 10-15%, I would think let the market correct by another 10%. So that absolutely is like it's a ground zero. And then we start with a new administration and new thought process, new 100 days, new ambitions of the government, new ministers, and they will come and run for their targets and things like that. And then the new energy in the economy will also come. So at that point of time, markets will also accelerate to the new highs. So, but then this is the corrective mode in which you got to act. You got to build your portfolio. I'm not the guy who times the market. If I like something, I go and buy, let the market do what it does. And market, of course my portfolio go down with the market. It cannot resist the market moves. But I'm fine. I'm always reconciled to very deep corrections, because I have seen more than 50%, 4 times correction. So nobody has seen the cuts the way I have seen it. So I'm pretty fine. But most of the people in the market, they should also get reconciled to 10-15% correction. And once that is there, you're reconciled to that, and you buy the good stuff, high ROE, high growth at reasonable P. You do well.
Okay. So I'll go back to the courage part, and then we'll move to the patience part. And I'm going to connect it with the current setup. If markets don't like the election verdict, and if markets fall, I'm putting all possibilities, if markets fall by 10-15%, you would be a buyer that time. You would be a buyer saying that if markets fall because of sentiment and because of election verdict 10-15%, you would put money to work, irrespective of the verdict.
Yeah, see, Nikunj, we should have money. See, typically my problem is that when markets fall, I don't have money, because I'm 100% invested. So at the top of the market, you're 100% invested, bottom of the market, also you're 100% invested. But if I can switch something, or if I get dividend or something in that year, I'll definitely be a huge buyer. Maybe this time my net worth is such that I may even leverage a little bit if the market falls by 20-30%.
So on 15% decline, if it happens, for whatever reason, happens or happens, we don't.
You should buy.
You should be a buyer, irrespective of the election verdict. Okay. Now comes the third and the most important part, patience.
Patience.
The most difficult part. Vision, courage, patience. Patience is the most difficult part. Can I just acknowledge it in front of our viewers that large part of the wealth what you've created is only because you believed what your logo was, buy and hold. It is the holding period which has created large part of exponential wealth for you.
Yeah, see, when you talk about compounding, compounding has, one is the rate at which you compound, and second is how long you do it. So the base effect, see, in compounding, the base keeps changing every 2 years, every 3 years. Say at the 25%, you start with 1, in 3 years time it becomes 2, in 6 years time it becomes 4, 9 years time it becomes 8, and then after 10 years it becomes 10, and after 20 years it becomes 100.
Yes.
Now when you have the base of 100, and then you grow at 25%, you grow 100 on 100. You start with 1. So you have to allow, why the patience is required? You have to allow the base to become bigger. And the base will become bigger only over a period of time, not overnight. Because I can't ask for more than 25% growth. So at 25% growth, one will become 100 after 20 years. And then 20 to 30 is going from 100 to 1000. So that journey of 900 times of 1 rupee will happen on 21st to 30. So, but then you have to pass that 30 years.
So just लेकर के अच्छी कंपनी बैठ जाने का.
Yeah, but company should also be good. Company should also deserve to get your 30-year money. If the company is useless, then you're sitting under wrong tree. So, what I find so far, more practical aspect, you should see Indian equity as a whole is very interesting place. So you should be allocated in that. So you should not time the allocation to Indian equities. Now within Indian equities, you can kind of move from one stock to other stock whenever you see bigger opportunity. Because what is happening is, whenever companies are successful, thanks to social media and lot of chasing and excessive optimism, the stocks go through the roof very quickly. It discounts the next 20-30 years right in front. If it has discounted, say something is trading 110p, 120p, 130p with 15-20% growth, the companies will do very well, but the stock will not do well. Because you have already discounted so much of future earnings. So that is a point of time you can, from a very popular, very successful company, you can switch to not so popular and not so successful, rapidly growing, but at reasonable price stock. But that is within the allocation itself. I hope I am making clear.
Yes, yes, yes. I mean, it's important to look at what is in the price.
Yeah.
Okay. So I'll wrap it up with a compliment and then a question, which is wealth creation studies. I have personally benefited. I always say when we interact, please go on the websites, available for free, download them, read them, keep a printout, and I've read some of them several times. You've completed 25 years in your wealth creation study.
28.
28 years now. We are in 2024. Imagine 2030 and we are discussing your 35th or 34th wealth creation study. What do you think that wealth creation study that time would be?
I don't know. I even don't know 29th what it will be. It depends on what kind of people I met, what kind of books I read. Last year we did the hockey stick strategy based on a book which I had read just 3 months back. One of my the friend in my building, he gave me the book, read the book, fell in love, and immediately I read the book twice back to back and converted into wealth creation strategy. So what kind of book I'll read, what kind of insights we'll have, what kind of difficulties we have. See, one of the method of enhancing the knowledge of your own investing knowledge is through wealth creation study by taking up a subject which you would like to know a little more. At some point in time, maybe one of the study will definitely do, maybe in 2-3 years time, about the AI also. But AI itself is not understood right now. So the impact of AI, like we did atom to bits, like that, something like that will come up when I want to enhance my understanding of AI. But today, I don't know what will be the other thing, but I know the best study is the last study always. So 20 years study beyond hockey stick strategy. That is, I think, is one of the finest wealth creation studies you must read.
Well, always a pleasure. Thank you very much for joining us.
Thanks.
We've really covered a range of topics in today's discussion. We hardly discussed short-term with Raamdeo this time. I guess looking at the setup of the market, we focused a lot on the importance of the election cycle. With that, it's back to the studio.
If you like this video, then like, share and subscribe to ET Now.